Alright, hope everyone's doing well. One thing I want to do is I'm going to start structuring these videos in a better, I'm going to start structuring them more so they're easier to follow because I know I kind of jump around. So I'll start with always in, and here is the Emini. So if we zoom in, unfortunately I ended up looking at other markets besides the Emini. But you could have done very well swinging the Emini. So anyways, let me just fix a few things real quick. For always in, probably clearly always in long on this rally. I don't ever think we really went always in short on the open. So if I had to do anything, I would buy, stop down here. And, what about right here? I think if anything, 50% pullback, bulls are going to increase their position or scale in. And would I get out up here? I would not. I think this is, so far this rally and this rally are stronger than any sell-off today. And it's part of this channel, so even though we're at the all-time high, I think it's better to, I certainly wouldn't go short, I wouldn't, I say that I would not go short, and I probably would not get out below here, if I did, or if, a swing bull did. I think they have to get long again above this bar here, or, any of these closes. Clearly back to always, clearly always in long. I don't ever think we went always in short. Stop down here. Any of these closes, your stop is probably at this low. And, again, stops far away, maybe through here, minimum stop here, but realistically, maybe down here. You probably won't have to risk that much, but that's just where the stop is. So always in long, another bull breakout, getting very climactic. So, getting climactic, so reasonable to take profits, but, no reason to short, stop down here, if you're long up here. And consecutive buy climaxes, at this point, probably best to look for 10 bars and 2 legs. So, once again though, no real reason to short, a micro channel. $12, $13 bar micro channel. Here I could see getting out of longs, very strong rally. Right here getting out of longs, I certainly wouldn't go short. And maybe waiting for test the moving average, but theoretically bulls have to get long again if the bears fail. And, here, double bottom, high 2 buy. Bears haven't done enough, probably back to always in long, somewhere in here. But, getting towards the final hour of the day, still haven't touched the moving average, but clearly always in long. I'd get out below here. When you get a rally late in the day and a move that's this parabolic, usually we're going to close this gap. And that's pretty much the end of the day. So, hard day if you're, well, I don't want to say that, but it's difficult because the risk is bigger. So, best advice I can give is to, it's one of the benefits of trading small in a market like this is you see the market going up, you see it rallying, and you're trying to figure out where to get in, but you can't, trade a 4th or a 5th position and just put your stop down here. That way, if you cannot find the place to get long, you at least you're in the market. So, let's just say you trade 500 shares in the spider. So I'll go to the spider real quick. Or that was weird. So I guess it right now is rollover. That's kind of, well, am I right? Yeah, okay, so sorry about that, but rollover day, so all the price has been adjusted, I guess, right now. Anyways, back to what I was saying. If you were trading let's just say you're trading the spider, and you decide, one moment, sorry about that. So if you're trading the spider, and you trade normally 500 shares, and you can't figure out where to get long here, and you can't figure out where to get long up here, just buy 100 shares, put your stop down here. And even though it's not a lot, and worst case, you don't add on. So, let's say you bought this close at 222.16, and you exit, up here, anywhere up here. Well, you'd have made $2. So at least you would have made, sorry, one moment. Sorry about that, had to take a quick phone call, but kind of forgot what I was saying. However, trading small allows you to at least, kind of like what I said last night, buy small or have the ability to trade small. That way, it's easier to get on the moves. Most people have trouble with the day like today because they look and they go, this rally is 6 points. I don't want to put my stop down here and risk 6 points. I don't want to lose. Well, trade small. Key, let's see. So we've talked about always in. We've talked about trading small. Let's talk about two things I want to discuss real quick. First, I want to discuss counter trend trading on a day like today. And the next thing I want to discuss is I'll talk about Apple, or, I'll talk about Apple and AT&T because that's kind of things I looked at today. If it was really hard to make money shorting on a day like today. So with that said, my best advice would be, whenever number one, I would like to see bears make money. So let me just go back to the E-mini because I know more people are looking at that, probably, that are watching this. If a trader sells here, I want to see if they made money. And you can see, if they sell here at 22.08, I want to see them make money. Well, they made 1 point. From this high, it fell 5 ticks. Well, if I sell this high at 22.08.5, look what happened. At some point, I sell at 22.08.5. I try to scale in 1 point higher up here. Well, you've got to ask yourself what's going on. You're getting a lot of consecutive bull bars. Very dangerous in a market like this. It's a small pullback trend. These pullbacks, the biggest one was 22.08 to 22.05.25. So that's around 2.5 to 2.75 points. It's tiny. Far too small to be scaling in higher. Second is, I know in Al's room someone asked about selling, I believe, this high one, or selling up here. If you're taking that sell, look to the left. You're getting a lot of open gaps. Breakout, another breakout. Bears haven't made money in a while. It's also a micro channel. So if you sell this high, I would, personally, if I sold it and I get 4 consecutive bull bars, I'd probably just exit. I think there's too much risk of another breakout. The next thing you could do is, maybe even look here. You can't really, there was no real place to scale in higher to avoid a loss. So I really would stray away from doing that. So let's look at Apple real quick. Pretty good movement for stocks today, with, I guess, with the spider and E-mini. rallying. But anyways, probably always in long somewhere over here, but starting to go sideways. And this happens a lot. You get a breakout. Not clearly that it didn't clearly break above the trading range. So always in long. And, did it become always in short here? Maybe, but the reality is when we fall below a logical stop and turn back up, it could just be a pullback. So, if you think about it, scale-in bulls will buy more lower, and get out here. But this is a tight enough channel for at least a second leg. So, always in. Maybe you buy up here, but if you do, you probably get out over here. Pick a bar. Maybe you buy here. If you want higher probability, you wait to buy up here, stop down here. And this is, so stop down here. And, do you get out here? Well, you can, but tight enough channel, probably the first reversal down will fail. If anything, I think bulls will buy more down here and scalp out. And we just kind of rallied. So another thing about trading small, you can buy. Let's say you buy right here, and you want to trade small, and you say, I'm starting out 109.94 to 109.42. That's 50 cents. Well, let's pick a number. So 50 cents. Let's just say 500 shares. You don't want to risk 500 shares. Maybe you're saying, okay, I'll trade 300 shares. And that's only $150. Or better yet, let's just say you're saying, okay, I'll trade 200 shares. I only want to risk $100. Well, trade 200 shares. And, one thing you could do is you could take part off at, 50 cents. One times your actual risk, or one times your initial, somewhere up here. So take 100 shares off and just trail the balance. So you get out and you get a new breakout, move your stop, the pullback. Maybe move your stop up here after this breakout, but it's okay to keep your stop down here. And you hold into the close. Or maybe you get out all right here. If you really want, you can take half off here. So now you're long 100 shares. And at this point, your stop is below here. Then you can say, okay, I'll buy more at a 50% pullback. So you buy somewhere down here, scalp out again, and you hold long. So again, trading small, many choices. The main thing is just get long. Let's look at AT&T here. Here's another good market. 3-bar breakout, probably always in long, so you can buy, stop down here. And a couple ways to handle it. We never really went always in short at any point. Maybe one way to go about it, you buy this close, maybe you buy 200-300 shares, stop down here. You take part off at 1 times, part off at 2 times. Many ways to do it. Just whatever suits you best. So all in all, the main takeaway is for the E-mini, small pullback trend days, they can go a long way, and they always look overbought, and they always look like they can't go further, but they do. And it's one of those things where you look back and you realize that this move was 30 something points. So that's why I think it's best, if you can, to trade small. That way you can make sure, or have the ability to, that way you can make sure to at least, you see the market always in long, buy, put your stop down here. And let's say you only like trading pullbacks. Well, in your normal positions, 300 shares, okay, or 400 shares. Well, buy 100 shares, put your stop down here, and wait for a pullback. Like I said, worst case, you just miss, you don't add on. But it's being long 1 share is better than being long 0 shares. And I know, no one's ever going to actually trade 1 share because commission is just too high, but you get the point. So, where do we go from here? I want to see something. Oh, okay. Yep, so it is rollover day. So where do we go? Well, strong bull breakout. Probably at least a little more up. Maybe this is a measuring gap. Who knows? Weekly chart. Probably going a little bit higher, but again, possible 3 pushes. 1, 2, 3. 1, 2, 3. Really. Or something like that. Doesn't matter. Climactic. Odds were a little more up. It's a wedge now. 1, 2, 3. So we'll just have to see. Alright, comment below if you have any questions. Thanks.